Welcome to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. The show is designed to help Canadians invest better in Canada and the United States. We specialize in mortgage financing and education in both countries. Discover how you can become a better investor and access the financing you need. Welcome back to the Wisdom Lifestyle Money Show. I'm your host, Scott Dillingham. Today, I have an awesome guest I'm super excited to have on with us, Glenn Sutherland. So Glenn is an expert helping Canadians. And even if you're not from Canada, you can still tap into his program and learn how to invest and purchase properties in the States. So I'm really excited to have you on because this is an avenue that we're venturing down with the lending. So welcome, Glenn.
Oh, thanks for having me. I'm excited. This is going to be fun.
I'm excited. Yeah, no, for sure. So I'm curious though, what inspired you, right? Because you're a Canadian. So what inspired you to want to invest in the States?
Well, you being a lender probably know some of this stuff. I actually know you know really well know this stuff. But I used to do traditional lending with the Canadian banks and, use the big five or big six, depending on how people look at it. But I used to use those banks. And one of the big things is I got maxed out. They started saying, I think at the time I had 4 or 5, maybe 6 Canadian properties. I can't remember exactly, but they were saying, you're done. You're going to have to go to secondary lending. You're going to have to go somewhere else to find lending. You're basically cut off. Actually, you know what? They didn't pitch to go to secondary lending. They just said, you're done. You're not going to be doing any more investing. They weren't going to give me any more even creative strategies. That was one of the big things. The other thing was that when I was investing in Canada, was the landlord, the property manager, the contractor, the everything. Because I was the property manager, and honestly, it's not my strong suit. That's why I hire other people to do this, because I trust way too much. I understand when I'm hiring contractors to do it my way, but I trust too much to do property management. When someone says they're going to give me rent, I assume they're going to give me rent. So I ended up at the landlord-tenant board way too much. Ontario landlord-tenant board, because I live in Ontario. And the other thing is, doing the contracting myself, I'm not a contractor, but I'm fairly handy. I can do trim, put cabinets together, do a lot of stuff. And so I would take, weeks off of, I used to have a 9-to-5 job, take weeks off of work to go work. And, if you have your properties like 10 hours, 12 hours away, 20 hours away in a car, you're just not going to have that option to go fix this. You're not going to be running over there in the evening. So it freed my life up.
No, that's awesome. You're right. And you're right. I do know those points. I just wanted to hear it from your perspective. And you're right. I mean, it's just, it's a different world over there. The things that you can do. It's crazy. So for your first purchase over there, what did you buy? What did you go after?
Well, this is actually a really common question I get. And I'll tell you what I bought, but I honestly wouldn't recommend going down this path. Okay. It was for somebody who I wasn't hiring a coach, wasn't getting advice, wasn't listening to podcasts, wasn't, at least there wasn't cross-border podcasts back when I started back in 2016. So I was kind of winging it. But what I started off with is I bought some turnkey properties in the United States, started off as a property in Alabama, was my very first one. I bought it with cash because I didn't understand U.S. financing. And because everything was new, but I figured I'd go as far as I could go and I'd figure it out. And then when I bought property 2 and 3, I put all 3 properties into 3 mortgages all at a time, and I refinanced basically the first one into 3 properties all in one transaction. And met somebody who could help me with that. Yeah. So
nice.
You want me to go into specifics about what kind of property it was, or?
Well, no, you don't have to. The fact that you wouldn't do it that way again. I'm curious what way that you would recommend, a Canadian invest over there to get going.
Yeah. So the problem with what I did was the same problem anyone has when they do a lot of rental properties or any kind of rental properties, even in Canada or the United States, is if, say you have, I don't know, everyone has a finite amount of money. And if you go put that money into a property and you buy it at market value, how do you grow? How do you continue to buy your second property? Where does that come from was the problem. And so, at the time, I basically used my line of credit up because the exchange rate was a lot different. And I went and bought, a U.S. property, and I was like, how do I expand? And that was where I kind of got myself stuck. So in this even current market
Yep.
right now, there is advantages to even like, the 2022 market where everything was flying off the shelf. Right now, people are more open to seller financing. People are more open to, inheriting mortgages. They're more open to a lot of strategies because the market is moving a lot slower. So it takes them a lot longer to sell some of these properties. If these properties aren't in 100% shape, tip-top shape, needs some renovation, needs something, then they're going to even more be open to these sort of strategies. But basically, if I was going to buy now, you need to find an exit strategy to the property. It can't be just, I'm going to buy this and hold it forever. Like, forever is not a good strategy. So, how are you going to refinance this property in a future time? And if you're going to refinance it, why would it work to refinance? Are you going to add value to it? Are you going to buy it at a discount? Like, you need to be doing something, not just buying turnkey properties. I would honestly wouldn't advise that, because if you're banking on appreciation as your exit, it's not the market for that.
Yeah. No, and I agree. And you said something there too. You didn't say the word, but you're talking about is leverage, right? As well, because if you don't have the correct leverage, how can you grow your portfolio, right? If you're buying everything cash. So that's definitely one of the things that I encourage investors to do, right? Is compare leverage, right? If you can get leverage in Canada, great. Compare it to the States, see what that looks like. But if you're going to buy cash, right, it will limit your growth for sure.
Yeah. And then, like,
But no, I
I
love
know
that.
you
Thanks
work on
for
both
sharing that.
sides. And like, depending on where, talk to somebody like Scott, figure out what kind of interest rates based on your experience in the US and what your interest rates in Canada are, because you might have at least to get your feet in the door to get started. It might be the cheapest money might be your line of credit or your home equity line of credit in Canada. You can move to the US. It might be going straight into the US
Yeah.
lending, right? So I think it's about having that conversation first to understand which is going to work the best. And if you can find somebody like Scott that works on both sides, they can be a one-stop shop instead of contacting several people. And one kind of, American lender doesn't understand a Canadian lender's sort of, if you're forwarding emails back and forth to each of them.
Yeah. That's always the hard part, is when a Canadian does go to a US broker and they're like, no, sorry, we don't have foreign national lending. And it's like, there's so many lenders out there. But so being in this, I haven't been in this world as long as you have. I mean, I've was born in the States, moved to Canada when I was 4. I always wondered what I was going to do with my status, right? And then it hit me the one day to open up the lending. But you've been doing this for many years, and now, right? I believe you are a coach and you have your own programs to help Canadians, and I think that's really important, because what I see when I speak to Canadians is like, how do I do this? Where do I start? What's next? What type of entity? All that stuff. And I know you go over all of that. So I'd love for you to talk a little bit about your programs and what you do to help investors, because I know there's so many that would move forward if they had a clear path to do so.
Yeah. So we cover everything, right? The idea is that if you take the program, you should be able to replicate what I do. I'm not the kind of person that's hiding it, or I'm not selling up for a second course, to charge you more money a second time. So like off the start, we're going to be like, starting with the basics, understanding the differences between Canada and US. Honestly, answering the biggest question is the market, like where to invest in the United States. They're literally 10 times the size of Canada. They have so many cities, so many states, with all different regulation, trying to figure that all out and negotiating or navigating that, setting up your corporate structure. And we actually have like some special discounts with some attorneys to set this up so that they'll actually be a much cheaper price, like literally 50% of what the regular attorney price is, just because of the volume. Setting up your corporate structure, understanding all the laws, the FERPA, the FAPI, how Canada Revenue looks at this, how the IRS looks at this, understanding all the different advantages of the US. For instance, and I'm not talking like, just, the evictions and all that stuff that committing in the state. I'm talking like the advantages. Oh man, I lost my train of thought. But like you could, all the different structures. So, strategies.
Yeah.
So like you can do subject to in the United States, which like is not as easily done in Canada. which is inheriting a mortgage or splitting a mortgage from the lien holder and the debt on it, and just let them keep the debt and you take the ownership, which isn't really a strategy that happens in Canada. But understanding how to do that, paperwork to do that, how to set up a contract for deed, a lease option, how to buy from the banks, how to do short sales, how to do foreclosures, how to do tax deeds. Like there's just a lot of stuff. And a lot of people are going to say, well, I don't really need to do that. And so you don't have to do all of that stuff. It's just all there. But you'll find if you understand and know all of these things, something will trigger you. Like you'll be talking to someone and they'll say something that you'll go, wait. And it might be because you're like, I don't want to make phone calls. I don't make phone calls. But you're talking to a property manager and they can make you a connection. And you're like, they might say something like, I don't need the money right now. Right. And you're like, light bulb, wait a sec. What are all the different ways we could do this? How could we structure this so that I could get very little money down? How could I make this so that it's a great win-win for both of us? And I think that a lot of it is just to be able to understand all of the differences, all that happen between Canada and the US, and understand how to implement them. And even just being in the coaching program, when you have questions, when you're doing a deal analysis, some of the biggest questions are what I usually am on the phone or on a Zoom call with my students is that they're just like, hey, this is the deal. Can you check to make sure these comps are good? Because I don't want to make a mistake. Or they just have questions. You just need somebody to make fewer mistakes, just to ask those questions, right? Or like, I just got my E2 visa and social security number. You don't need that to invest, but if you have questions or want to know how to do it, like just to have someone to bounce those questions off of is really important. Because mistakes can be very expensive. If they're done wrong, you could lead to double tax if your corporate structures aren't done in compliance for Canada Revenue. There's a lot of different things that you're kind of juggling, and just to shortcut the whole thing I would have bought it myself, and that's why I keep the price low, because I want it to be affordable for what I would have paid at that time whenever I wasn't making the kind of money I make now.
Absolutely. And you're right. You bring up so many good points about all the different ways to save money. And like one of the biggest ones, it's the easiest thing. And you know it, right? When I tell you, you'll know it. But like Canadians, when they go to buy over there, they're like, okay, I'm going to offer a lower price. Okay. And that's great. And a lot of times you can get a lower price, but it's actually more effective. And I know you know this, is to get a seller credit, right? Get the seller credit. Use that to even buy down your interest rates if you're borrowing for lending, or use it for your closing costs, right? Like you can do all these different things, because in Canada, you can't get the credits. I mean, you can,
Yeah.
but what happens is the lenders lower the purchase price by the equivalent of the credit, right? But over there, that doesn't happen. The lenders will finance that. So just with that seller credit and buying down your rates, that can save thousands and thousands of dollars. Like it's so much better than lowering the purchase price. Obviously, do both, right? Get the lower purchase price and the credit if you can. But little things like that, right? Which I know you go over in the course. So that's awesome.
Oh yeah. I have a whole calculator for the buy down rates that you just mentioned. Like the idea with a buy down rate is you could pay a little bit more in fees up front, but get a lower interest rate. And what I like to do is you need to figure out what the break even point on that is. Like how many years do I have to hold this property to pay for those extra fees I'm putting to get the savings, right? And it's just a chart, right? Everything makes a break even point, and you're like, it has to make sense. If you're like, hey, I'm doing a 2-year project, but my break even point is 3.25 years, you're like, well, let's just pay the higher interest. So it's about making smarter decisions.
No, it's really, really cool too, right? And then obviously cash flow. Do I need to buy down the rate to lower the cash flow or increase the cash flow? But a lot of Canadians, they don't understand what they do over there. So like in Canada, let's say you go to RBC, I'm just going to pick them. Your mortgage is going to be with RBC forever, right? So you have to. But in the States, what they do is right when you get your mortgage, they actually sell the debt. And it might be a couple months later, because sometimes they'll group a bunch of mortgages together and sell it. But that's why they're really willing to accept you paying them the fees up front and getting that lower rate, because in their mind, they're like, I don't care, I'm selling the debt. So if I can make extra money now, why not, right? So I will say that for every Canadian, when you get your mortgage statement every year, it might reflect a different company every year, but the terms that you get and everything that you get are locked in. Okay, so the debt, even though it's being sold, is not going to alter anything for you. So,
but since you
that's
brought
awesome,
up
Glenn.
RBC,
So let's say Sorry?
I got one thing to add, because I know that it'll be a faux pas if you bring this up. But one thing that Canadians may not understand, because a lot of them, they have that they're comfortable with this Canadian banks or other Canadian banks, the BMOs, the other ones are all down there as well. But if you're going to go down that path rather than talking to a broker like Scott here, you're going to have to personally qualify with those banks, and you really should understand what kind of liability you're taking on compared to not personally qualifying, putting this in a corporation, because of the different taxes, how your taxes are going to be changed by paying it personally. When you sell the property, if you sell it, could be subject to FERPTA. You could be subject to double taxation, depending how this is set up. So, well, it's one of those things that, if Scott brought it up, you're like, oh, it sounds like he's just preaching my own thing, but it is true. And it is something you should understand, the risks you're taking, and even the personal liability that someone could sue you if this property screws up in the US, that if it's personally liable, they could be coming after your assets in Canada. Whereas if it's a corporately liable, it would be broken by the corporate veil.
It's a great point, and I didn't want to bring that up. Yeah, and that's a great point, and you're right. I didn't bring that up just to I didn't want to stir the pot. Well, you are right. The Canadian banks that lend over there, it's very restrictive. It's personal name. It's based on your debt ratios instead of the property. They also have limits. Like, one of the banks will only let you have 3 properties. And if you own over here, then you're done over there. Like, if you've got 3 here, then you can't even buy over there. So it's very restrictive. And a lot of clients think that is their go-to. But you're right. You nailed it with the liability. The US is very sue heavy. It is compared to Canada, right? So to own things in your personal name is such a big risk compared to putting a property in an entity and having that isolated from yourself. So you're right. It's a massive thing. Now, for those that are listening that want to take the next step, but maybe haven't, or they've been hesitating, how do they find you? Like, how do they join your course? How do they get access to you?
Yeah, well, there's a million different ways. I'm on everything. If you just type my name in, it'll show up. But I do a podcast. Probably the easiest way to get a feel of how I do things. But Canadian investing in the USA or US, I don't remember which way it is on iTunes and Spotify. But you can find me there. That links. We do a Facebook group which we share lots of information in. It goes by the same name, facebook.com/Canadian investing in the USA. If you want to get on a one-on-one call, just reach out, send me a text, send me an email. My information is on my website. That's my actual cell phone number that'll actually go to me. And I'm here to, I've been through it. I've done a lot of mistakes. I've learned a lot. I've refined it every single time. And I don't want you to do the same thing. Let's skip some steps.
No, that's awesome. And you know what? I just want to throw this out there too. There's a lot of people that live in their mom's basement that offer investing advice and trying to sell coaching programs. And I can honestly tell you that I know for a fact that Glenn is an investor in the States. I know that he is. And I want you to know that he's not somebody, again, that lives in their mom's basement that has this overpriced course and they've not taken action on anything that they're trying to teach, right? So I think that is a really big, especially in today's market where you hear of people going bankrupt and that coach went under and this one went under, or that one lied, that one's being sued, right? The great thing with Glenn is he is an investor. You can look me up as well. I'm an investor, multi-property owner, and we're giving you the advice from experience. So that really speaks a volume when you guys are researching or deciding to purchase a product. So awesome. Well, thanks so much, Glenn. I really appreciate you coming on, and I'm looking forward to seeing you grow.
I appreciate it. Well, I'm already grown quite a bit. I'm actually thinking of degrowing, getting it down to a reasonable amount of properties, because right now it's a lot. Anyway, no, I appreciate you having me on the show. This was a lot of fun, and I love talking real estate.
If you're serious about investing and you want to take it to the next level with the least amount of time and mistakes, then you're going to want to sign up for our Real Estate Investor Hub. Visit investorhub.lendcity.ca or check the show notes for the sign-up link. Inside, you'll have access to real estate investing courses, networking opportunities, webinars featuring industry professionals, as well as dedicated chat channels to share and get access to unique properties. I look forward to seeing you there.